All right, viewers, let's go across. We also have Amit Agarwal now, Group CFO, Raymond Lifestyle, to talk to us about the numbers. And frankly, you've got some of the value retailers which have done ever so well. I'd want to understand whether at the higher end of the chain, are we getting similar kind of growth traction? Q2 revenue grew 7%, Amit, but segmental margins were mixed, especially in apparel and garmenting. What drove the divergence? Give us a sense there. And how do you see margin recovery shaping up in H2?
Unfortunately, what has happened is in the garmenting business, which is primarily an export-led business, we have had a severe impact considering the tariffs issue, which we all are aware. And I think that is something which has impacted both on the fabric exports as well as the garmenting exports. That has put the overall growth in revenues in single digit. Otherwise, if I separate the two businesses, it has done well. As far as the apparel business is concerned, we have been very clear that we are going to invest behind the brands, and we have put a significant increase, almost 40% increase compared to the last year to this year on the marketing and ad spend, because you are seeing the visual ads. And what is very common in this sector, which is a discretionary category, that when you speak about your product, the quality, the features, then you have the traction of the sales. And since we have opened a lot of stores, the impact of the rental and the cost of people has also impacted the profitability. But very clearly, we are going to see, and we have very clearly mentioned that over the next 2 to 3 years, we will see a significant improvement in the margin profile as we grow our volumes in the apparel segment.
Right. And your PAT saw a sharp jump up as well. How sustainable is it given that the global uncertainty still persists?
Yeah, no, absolutely. I think we all know that the Raymond lifestyle business comprises almost 80%, 78% of the business is a domestic-led business. And I'm sure we will talk about more about it, that we have going forward. We have already in the wedding season, which is very good, as well as the number of dates for the weddings are going to be very good. So second half traditionally has been always much stronger compared to the first half. But the impact of the international markets, and so far we don't have a trade deal. So you will see that even if the trade deal happens, the the US customer starts to give their orders. By the time the fabric gets stitched, fabric gets procured, stitched, and shipped out, it will be somewhere in the February and March. I think so this quarter you will see still the impact of the international markets, but the domestic markets, I can assure you, they are doing quite well for us.
And Amit, how is consumer demand shaping up after the festive season and ahead of the wedding season, especially at the at the premium end? Give us a sense. And after the GST rationalization as well, so plenty of measures. Where do we stand at?
In terms of the fabrics, you see it was at 5%, remained at 5%. So therefore, there is no change whatsoever on the fabric. The fabric demand stays stable. As far as the apparel sector is concerned, our most of the apparels, which used to be more like 2,000, 2,500, 3,000 rupees, there we have seen the change. So whatever was beyond 1,000 rupees and up to 2,500, which was at 12%, now moved down to 5%. And what is above 2,500 has moved up from 12% to 18%. So overall, as you see in the sector, there was a mixed feeling till September end because it got implemented only on 22nd of September. People were not coming. The dealers, distributors were not really taking in the material because they were not clear how it will pan out. But from October, we have seen a surge in the demand for the products. However, I would look at it more so that people went on for a large purchases in the September and October and November. And what we are going to see is that the amount of savings which they have made on these large ticket purchases, be it car, white goods, and so on, is going to come towards the demand for the consumption in the discretionary sector. So we are very optimistic that the demand will not flow directly because of just the GST cuts. However, because the people would start saving money as the interest rates have come down, the income tax benefit people have got, as well as the GST cuts enabled purchases to be at a lower for the automobiles and white goods, enables much more money in the hands of the consumers, which eventually goes out on the spending into these categories like apparel, where we operate clearly. And I think we are very tailored, geared up to cater to that demand. And the wedding is coming very well into the season.
Okay. So, Amit, I want to talk about the US tariffs, which it seems are going to continue to pressure global competitiveness, right? And have led to order deferrals as well for you. Now that we're inching closer to a part deal with the US, how could this translate into your financials if the deal does go through?
Absolutely. I think we have been supplying to our customers in the US for last 15, 20 years. They all are very clear that once the tariff situation gets compromised from 50% to even a 25%, which is more likely than not, then immediately we will see the orders. Even today, also, some of these customers are coming forward because of our integrated supply chain, right from the fabric all the way to stitching garments, and the quality of the garment stitching which we have is clearly a unique proposition which the customers have. So very clearly, we are seeing that advantage will flow in, but not at 50% because the gap is too large. Now, if it comes at 25%, then we are very well in the striking range. And what is also happening is that in the US, because of various reasons, there are a lot of customers now getting concentrated and saying that we want to work with few suppliers who are very quality led, who have helped them in the difficult times. So we have been also helping the customers in terms of participating a little bit on the tariff side, that how do we share that tariff. So that also goes a long way and that builds the relationship. So therefore, we are very optimistic that going forward, once this settles down, and it is not from today to tomorrow, you would see the surge in the demand or the order shipped out because it's a cycle of 4 to 6 months. I think even if we get settled in November, I think next year onwards, we should see a rapid pickup in our revenue numbers for the garmenting business.
Amit, hold that thought. Tenneco is the new company on the block now. It's up 30% from its IPO price, so significant gains for shareholders who have got a subscription to the Tenneco IPO. Now trades at around 30 times, so something to, of course, watch out for. The IPO price was at nearly 20 times, so that substantial listing pop that we're seeing on a Tenneco. It listed at 505, which was a 27% premium, currently setting a percent and a half higher. So 28.5% is what subscribers to this IPO are currently making.
Oh yeah, that's a solid premium actually. And I mean, both Physicswala yesterday and Tenneco both have had a decent listing for themselves. We'll continue tracking that new debutant. But Amit, coming back to you, with UK import duties now eliminated on most textile goods, how is it that your export to the UK is shaping up, and what scale of benefit do you expect there?
Over the next 2.5 years, we see doubling the business of UK from the current levels. Very clearly, very strong ties. You know that we have an office as well in UK, which helps going to even the smaller customers who were not able to come forward and reach to us. So that is also being catered by the London office. So that will clearly enhance our position in terms of penetrating into the deeper markets in the UK. But why UK? I think we are hearing the news as we speak that a lot more countries in Europe are getting into the FTAs. And I think that is a great market. And after this US tariff thing, we have already started to expand into many countries, which we were supplying in a very small manner in European markets. So I think Italy is becoming a very attractive opportunity. We have got some few orders from Italy, Spain, and we are working on some other orders in the continental Europe. And I think there we are going to get also a lot many orders. So I think it is a journey over the next 2 to 3 years. I think we are very bullish on the garmenting sector. If I look at it from the current level of revenue, we see over the next 4 years we have clear visibility of doubling this revenue.
All right, so confidence demonstrated there. You've recently announced a partnership with UniCommerce as well. How will you be integrating UniCommerce's Uniware platform to enhance your retail digital operations? How is that journey playing out, and what operational efficiency do you expect the platform to provide to you once fully deployed?
I think you have to understand that we have been in the journey of digitization and deployment of technology right from last 3-4 years. And I think that has been a key focus area. And this is one of the factors which we have incorporated. So now, like all our stores all across the country are fully integrated with our digital POS system so that we know exactly how the invoicing is happening, how the behavior of the customers is, and through usage of AI, we are able to clearly scan which part of the country, which kind of the age bracket is the customer buying. Similarly, the UniCommerce is also going to help us typically in the warehousing, the retail operations, that how optimized basis we can cut down our inventories and ensure that the right product is available at the right time and with the shortest lead time. I think that is where we are looking for the efficiency. We are also working on implementing the SAP for HANA, which should get implemented over the next 6 to 8 months. I think all that technology investments, which has been planned and being implemented right now, is going to boost the impact, the earnings, as well as the efficiency of the business. Our retail stores, which we have opened in the apparel segment of more than 350 stores, we are on the curve of in generating more sales revenue per square feet. And I think we have seen very clearly there has been an increase consistently, but I think we have not reached still the optimum level. There's still a lot of opportunity to grow that. And all these tools are going to be enablers for us to ensure that we get the benefit out of it and improve the efficiencies and at the end of the day, the bottom line of the business.
Right. It's so good having you today. Thank you for your time. Let's just move on. That, of course, was Raymond Lifestyle. Let's talk about where the market has settled in at. While we started off pretty quiet, we're pretty flat still. To think of it, that show of resilience clearly continues for us. And today is a lot better in terms of what the composition of the Nifty, or for that matter, even the broader market is like. IT today is the one which is leading the pack. Infosys up 2%, TCS, TechM, Wipro, these are all stocks which are holding out. Max, HCL Technologies, Bajaj Auto, Titan are some of the other names which continue to look good. From within the broader end of the market as well, Autocoms and IT. That's really the only story. So look at a Motherson, that's holding up 2.5%, Sona Comstar up 2.5%, and LTIM, which is also up 2.25% as we speak right now. On that, we're going to take a very quick break. When we come back, lots more market talk.